Today class, so this will be the next subject. All right, so okay, here. Okay, first we need to make it a slideshow from the very beginning. Okay, so financial statements. This is to be here, right? Okay, so this is your classmate, and then financial statements. So, AKA financial report is a formal record of financial activities and position of a business, person, or other entity. Financial statements should be understandable, relevant, reliable, and comparable. Okay, so the basic financial statements are balance sheet, income statement, cash flow statement. Balance sheet is statement of financial position or net worth or statement, while income statement or statement of comprehensive income or statement or revenue and expense, profit and loss report, while cash flow statement is a flow of funds statement. So balance sheet consists of assets, liabilities, net worth, or owner's equity. Balance sheet asset includes anything that is owned by the entity that has monetary value. Asset Assets should be separated into three categories, and that is current assets, intermediate assets, and long-term assets. Liabilities are financial obligations of the business, such as money owed to lenders, suppliers, employees, and others. So a liability should be separated into three categories, and that's current liabilities, intermediate liabilities, and long-term liabilities. So balance sheet net worth or equity is the difference between total assets and total liabilities. Total liabilities less liabilities, total assets less liabilities is equals to equity or capital. This is the accounting equation from the very beginning. That is the basic rule. Asset is equals to liabilities plus capital. Therefore, if total assets minus liabilities, that will equal to your capital. Okay, what's this? Oh my. All right. Income statement or profit and loss statement. It is a measure of revenue and expenses during a specified accounting period, usually 1 year. So the cash flow statement, also called the sources and uses of funds or flow of funds statement. So the total cash flow includes total cash available, which excludes borrowings, new operating loans, new medium and long-term or as well as consumption loans. While total cash outflow consists of total cash required, which excludes principal repayments, ending cash balance. Okay. Total cash inflow will include all that comes into the business. So whether it is an investment, additional investment, or that is revenue from operations, it's also an come inflow to the business. Whether it's money in from borrowing is also an inflow to the business. Where outflow would be you lend out your money to creditors, to debtors, and then you also uh, put out money for the operations, like you buy your goods or supplies, or you also pay your debts. So that's also an outflow, or you pay your investors. That's also an outflow. Service business. Net income is the difference between its revenues and expenses incurred in providing the services. Types of business: the service business, the merchandising business, and the manufacturing business. Merchandising business, that are businesses that are sells merchandise, or they are merchandising companies. So we must track the purchase, the cost of sale, and of these goods. This is through tracking the merchandise inventory account. Merchandising business supplies are purchased for use in running a business. Merchandising inventory is purchased for resale. Note this does not mean that pencils and paper can't be inventory. If you are a stationery store, then these items are inventory. The key concept is goods for resale. Keeping track of inventory. The periodic inventory method adjustments are made at the end of the accounting period to track the inventory. That's a periodic. And there's perpetual, wherein adjustments are continually made and updated to keep track of the inventory. Now, periodic inventory system purchases is debited when goods are bought from the supplier, classified as part of the accounts of cost of goods sold on sale or merchandising inventory, an asset account if unsold. So these are cash purchases, credit purchases. There are two types of purchases, no? Cash purchases and the credit purchases. You can purchase through cash and you can purchase through credit. Okay, so periodic inventory system, purchase returns and allowances. There are debit memorandums and purchase discounts as well. These are the accounts that you may encounter. So types of discount: trade discount, cash discount. Cash discount when you purchase, discount and sales discount. Okay. Inventory. Inventory adds an entirely new dimension to running and evaluating a business. Inventory values can be played with to alter a business reported net income. Inventory is usually significant because inventories relates with your profit and loss statements. The more you sold items, the higher your income. Okay, inventory can become obsolete. Inventory can cost a lot. Inventory can be stolen, right? So cost of goods sold. Since now we are selling goods, part of the cost of generating revenue is the cost of the items we are selling. Okay, so wholesaler versus retailer. Wholesaler, an intermediary that buys products from manufacturer or the wholesaler and sells them to retailers or other wholesalers. While retailer buys products from the manufacturer or wholesaler and sell them to consumers directly. Manufacturing, wholesaler, retailer, customer. Okay, measuring net income. Net income to a merchandiser implies that the revenue from selling merchandise exceeds both the cost of the merchandise sold to customers and the cost of other expenses for the period. So measuring net income means sales revenue less cost of goods sold, which is equals to gross profit. Now, gross profit less operating expenses is equals to net income. Sales revenue plus income earned in selling merchandise, while cost of goods sold is the cost of merchandise sold during the period, while operating expenses incurred in running the business. Measuring net income, cash sale and credit sale. So if it's a cash sale, you will purchase, you will receive cash on hand, and you will give out your inventory. So that's a cycle. Or the other way, if you also buy your goods in cash, you keep money, you get the goods, and of course, you let go of your cash. It's the other way around also, if you are also the seller. Credit sale, because here the word is sale, so ikaw ang namaligay. So when you sell in credit, utang, your cash collection happens only after a while. It has to go through with an accounts receivable, an arrangement, a contract between you and the buyer, and he will pay later through accounts receivable. You have to let go your merchandise agad, but then your collection for cash will be later. Okay, so any questions? I hope there's no more questions, but thank you so much. Hope you will just play this over and over again so you can further understand the topic about financial statements and the type of businesses. Here, it did not really include about the service because service is very easy. Service is just performance of or delivery of the contract in the true performance of the service. Like I said, in the accounting services, for example, if you do bookkeeping for 1 month or you do audit for a certain client, that is a service. Okay, that is a sample of service, or lawyer's fee, professional fee, that's a service, right? Okay, so once it's performed, then it's considered a revenue, right? For manufacturing business, it's a different maybe different topic. It will include materials like direct materials, and from the raw materials, okay, and there's also this labor, direct labor, and then and that once these materials are in, and then there's overhead as well, because say for example manufacturing, they will have light and electricity to do the manufacturing process, and then water. That's the overhead there. Okay, so that will be included into a process of computing all that what is related to that specific product, and that product, the cost of that related product will be used to measure how much should be the value of your goods as part of your inventory in your profit and loss statement. Okay, so but the same principle comes. We are only, since you're on first year and we're tackling only, actually this is your minor subject that we learn from the basic only, which is the merchandising business. All right, so no more questions, right? So further, if you have questions, you can always write, you can always message me, and you can always put your concerns in the Google Classroom or in the Messenger. Thank you so much. Thank you also for the maker of the slide. Bye, class, for now. Let's have another more break. Let's have a break, and then let's have another topic. Thank you so much again.